A 1031 exchange refers to Section 1031 of the U.S. Tax Code, which allows investors to defer capital gains taxes from the sale of investment property, provided that funds are exchanged or reinvested in like-kind property, which is broadly defined as property held for investment or business purposes. Similar to a 401k, a 1031 exchange may efficiently build wealth by keeping more dollars at work. The IRS allows subsequent exchanges each time a property is sold, allowing equity to grow tax-deferred over an extended period of time. Like many tax provisions, 1031 exchanges are subject to several rules, which, if violated, may jeopardize tax deferment treatment. However, with proper planning, a 1031 exchange can be a powerful wealth-building tool. Less tax implications may result in higher value investments, both in equity and cash flow. 1031 exchanges can also be an important component of estate planning. With proper planning, at the time of an investor's death, properties may be passed down to their heirs on a stepped-up tax basis, potentially allowing for tax-free inheritance. 1031 exchanges have allowed many real estate investors to grow equity over the long term and provide tax-efficient generational wealth transfer. When properly executed, they are the foundational step in creating an investment property wealth management strategy.